This is Huskins from the Forex Training Prof reporting on the trade which we sent out on the live trading room um, uh, between 11:30 and 12 o'clock today. This is what I saw on the live trading room on the USD-CAD pair. We chose the Canadian dollar because it was the strongest out of all the different pairs and of all the different currencies, and we saw that we could have a downward continuation pattern on the USD-CAD 5-minute pair, and we can expect price to go to as low as 1.0193-ish area based on uh, an extension of yesterday's move and a retracement of today's move. Uh, we then went ahead and did our top-down analysis. We looked at the USD-CAD daily chart. The daily chart told us that over the last few instances, the market's been going up, coming down, going up, coming down, going up, coming down. Now the market's gone up. We expect it to come down. Even if we are very conservative and we do not expect, though this is a downtrend, let us assume that we are actually changing the downtrend, and the market does not want to reach or take out these lows. Uh, Conservatively, we can expect the market to reach the 1.0191 ish area on the daily chart. Let me plot that on the 5-minute chart so that now you can see that the area is very much this in line with our extension levels which have been drawn on the 5-minute chart. So this is a confluence of events. So I will definitely be looking at getting out of my position at this particular point or sooner. Why sooner? Because I do not want to be the last man standing. I do not mind giving up a few pips if I can get out of my trade at a decent level. Um, so now we went down to the 240 level time frame. The 240 level time frame was showed a beautiful Gartley formation. We had a downtrend, and then the price moved back up right to the 78.6 fib retracement level. It retraced from there. It created what's known as a 123 top, wherein the number this is 1, 2, 3. The number 3 point tries to break the number 1 high, but it fails to do that, and it closes below the neckline, the number 2 point, and the number 2 level is at 1.0364. Between 1.0364 and 1.0386. In normal circumstances, one can expect that the price to retrace at least up to these levels, or maybe not, before it tries to go down further. If it is a very strong trend, it might not come down to the 1.0364-ish area, but you can at least expect some kind of shift towards going towards that area before it starts its journey downwards. That's what tells us on the from the 240-minute chart. So now let us plot the levels on the 5-minute chart: 1.0364 and 1.0386 on the 5-minute chart. On the 5-minute chart, let us make this weight a bit less than the daily, but a little bit more. So it's 1.0364 and 84. 0684 would be a better level to play with, because out here if the market does reverse and try to go up till the 1.0364, we have a previous support which now might have been turned into a reversal, a resistance area to protect us from the 1.0384ish handle. But we need to weigh all our pros and cons of choosing such a wide stop loss if we were to enter into a trade. Now we look at the 60-minute time frame. The 60-minute time frame has drawn what we call a evening star. An evening star is a candlestick formation. It has drawn it close to a trend line. The way to trade this particular evening star would be extend this trend line into the future, and you expect the market to turn around and try and test this trend line again, but not go over the evening star formation. So the market should not go over the 1.0333, but it can come around and test the downward sloping trend line. So the market can actually, for this trade to be valid, we can see the market go right up till 1.0321, and that is still okay. The integrity of this evening star is yet maintained. So let us draw that on the 5-minute chart. The 15-minute time frame chart tells us that it we were in a downtrend. We were consolidating. We have out here what's called as a rectangle in a downtrend. We broke down that level. The market should try and retest the rectangle. However, at the retest of the rectangle, we do not see any candlestick formation. We just saw a retest of the rectangle. It came back and retested that rectangle, but normally in normal circumstances it draws a candlestick reversal pattern like a bearish engulfing or an evening star or a railroad track. It did not do that. Well, somebody could argue this is a railroad track formation, but it did not draw a distinctly acceptable candlestick formation. In light of that, I expect the market to reverse and go to between 1.0315 and 1.0326 area. So let's plot that also on the 5-minute chart. So now you can see that we have a lot of from our top-down analysis, we have a lot of resistance levels out here that the market's telling us that the price might at least try and penetrate around this area before it actually starts moving south. And in case we want to keep our stop loss, we need to have it at least above the 1.0364 area. That is why I issued, for an educational purposes only, that we'll sell the USDCAD at 1.0326 with a 50 pip mental stop, and we target 100 pips. Now what would be 100 pip at if we sell it at 1.0326? We would be targeting 1.0226. So our target area would be pips would be at about this level, which is before our major resistance levels, and then we have